quick shout out to We Got Your Mac. It is the ultimate resource for organisations deciding whether to embrace Apple Mac's platform at scale. It allows you to discover how to successfully deploy Mac alongside existing platforms and vendors, all with expert advice from IT and business leaders. So if this is something that is exciting to you right now, or even overwhelming and daunting, tune into the podcast for new episodes every 2 weeks and visit wegotyourmac.com to get recommended resources on how you can embrace Apple Mac's platform at scale in the enterprise. Welcome back to another episode of the Tech Talks Daily podcast. I'm your host, Neil C. Hughes, and today we're going to be diving into a topic that is increasingly critical in the banking sector: sustainability. Now, joining me today is the VP of Global Digital Banking at Hexaware-Mobiquity, which is a company at the forefront of blending digital technologies with banking operations. So today, I want to address the pressing issue, the tendencies of banks to sideline things like sustainability initiatives amidst these current economic challenges that we're seeing all over the world right now. And today's guest has got his finger on the pulse of the industry, and he's going to be sharing insights from recent research that involved 600 C-suite banking executives around the world. And that study revealed a startling shift in priorities, with sustainability now taking a back seat as banks focus on short-term profitability. But what does that mean in the long term? So I want to learn more about the trend itself, the risks it poses, and how technologies from AI to machine learning to cloud analytics can actually be a game changer in aligning sustainability with banking operations. But enough scene setting from me. Buckle up and hold on tight as I beam your ears all the way to the Netherlands, where today's guest is waiting to join me. So a massive warm welcome to the show. Can you tell everyone listening a little about who you are and what you do?
Yes, thank you. Thank you, Neil, for having me in your show. And my name is Peter-Jan van der Ven. I'm living in the Netherlands and working from a lovely environment, Amsterdam. I have a passion for technology. I'm educated as an engineer, and I've always been working on the crossroad of technology and banking. If I just look back at my career, I started as a consultant at KPMG Consultant already more than 20 years ago, helping a large bank with technology-related business challenges. And actually after that, I moved to a domestic consultancy party here in the Netherlands called Questor, where I've set up one of the first consulting practices that really focused on digital banking. We are talking 2008 here, so we were helping banks into the first steps of the digital era. After that, I also stepped out of consulting, moved to a product vendor in core banking. Did full journey from a small startup to a international scale-up, being responsible as CCO for sales, marketing, and partnerships. And 4 years ago, I decided to move back actually to consulting, which brought me to my current employer, Hexaware, specifically Hexaware-Mobiquity, where I'm currently responsible for our global digital banking business. And to provide you some background on Hexaware, we are a global technology and BPO provider, employing more than 30,000 employees across the globe. And that we would like to still refer to ourselves as it's called $1 billion startup, because we treat every client as if it were our only one, our first one. And that's a really important drive for all of my colleagues. And my department specifically, called Digital and Software, we combine creatives, consultants, and engineers to build digital solutions for our clients. And as said, my responsibility is digital banking, where we build and transform banks to make sure that they deliver real value to the customers. And because we have creatives, consultants, and engineers, we can actually do that. That technology is the heart of what we do, but we always want to make sure that we understand the end user and also our client and what's their brand purpose before we actually take in terms of technology. And we've worked for the larger banks in the world. We've built neobanks. We've helped banks with their innovation programs and launching value propositions. But we've also digitally transformed many banks into the new era of digital banking and also help them keeping their own continuous innovation.
And there's just a few of the reasons why it's so important for me to get you on the podcast today, because I'm fascinated around the world of banking, technology, or fintech. And I'm curious, based on your research and your experience, why do you think there's been such a significant drop in banking lenders prioritising things like sustainability, especially compared to last year? Because there seems to be a few changes here.
Yeah, we saw some interesting changes, definitely. I mean, sustainability is also one of the key areas, key themes in banking, ESG, sustainability, and we do research yearly for that. And indeed, we saw that actually in our last research, we saw that there was less attention for sustainability than last year, specifically in the UK, for instance. The number of banks are reporting sustainability as a key business strategy decreased with 40%. It's quite a significant shift. And the main reason for that is the current economic headwinds and also the risks associated with that. And this is also why banks are prioritizing on activities that provide more immediate returns. And this is also why I think it goes a little bit more to the background that the world's economic uncertainty is causing shoppers and organizations worldwide to watch their spending, which has an effect, of course, also in the financial system. And that has intensified this year. This is also why I think it's different to last year.
So if the economic crisis is influencing and playing a big part in influencing a bank's approach to sustainability, why do you think that shift's concerning for the long term? Can you maybe expand on that too?
Yeah, for sure. And then again, it's not surprising, of course, that in terms of economic efforts, banks will focus on keeping their own balance sheets healthy. And priorities will go more to short-term risk coverage and also profitability. But for the longer term, of course, if there is less attention on sustainability, first of all, it's concerning because banks have an important role in society, and they can be the front runners actually on sustainability. So if they slow down, it has an effect on sustainability in itself. But also for the banks themselves, I think it's risky because what we do see, there is especially the younger generation, they really connect to brands, what we call brands with a purpose. So for the longer term, this is definitely an issue too. It will hit the bank's brand, it will hit their reputation, and not just for getting more clients in or getting clients more loyal to them, but also for attracting talent. We also know there is a big war for talent still going on, even in these economic uncertainties, and not touching these type of developments will hit the banks that do not jump on the ship while others will do it. So for the longer term, it's definitely something they should look into.
And despite the recognition that things like ESG can better drive profitability, it does seem banks are deprioritising it still. So if we zoom out for a moment, what would you say are the potential risks of that short-term focus that banks are taking?
Yeah, indeed. Yeah, we see that more than third of banking leaders said that they feared that prioritizing any ESG policy could impact profitability and not show financial returns. So that's also the driver. But if you look at the risks, there's a few risks out there: reputational, missing out on benefits, market risk, regulation, but also impact on society. But let's look at reputational first. I discussed it also in one of your previous questions. It will hit the reputation if you deprioritize. Again, clients. That will hit your clients, it will also hit your talent. But banks also definitely miss out on benefits, because in the end, sustainability also could lead to cost benefit, right? If you decrease your energy consumption, of course, it has a positive impact, of course, on your cost too. So you're definitely also missing out on a lot of benefits out there if you push ESG also to the background. But also on a lot of innovation benefits. There's quite some clients where we use AI and ML to actually get insights in ESG, to provide insights in carbon footprint. And diving into these type of technologies, innovation will also help the bank on other areas. So that's definitely also one of the benefits that they miss out on. And on the other side, there's also market risk. There's a lot of business around green finance too, ESG related investment portfolios. We see many wealth managers actually diving into that area. So there are a lot of market opportunities also that you might miss. And of course, there's also regulation. As I said earlier, regulation is also coming with the bank traders. The longer they wait with actually acting, the harder it will also be to comply to upcoming regulation. And the last one, of course, the impact on society, discussed it also earlier, is also there if they shift priorities in terms of ESG.
And I think you've done an amazing job there of just highlighting the problem, the scale of the problem in the banking industry. And of course, this is a tech podcast. And I love exploring technology's role in this, especially in sustainable banking. So with that in mind, how do you think technology, particularly AI and machine learning and cloud analytics, can be leveraged to maybe enhance sustainability in banking?
Yeah, there's a lot of opportunities there. I've briefly touched it. If you look at the AL, ML, cloud analytics, it's all used to process large amounts of data and turn that into practical application. And we actually saw that also in the research that about 40% of the banks are developing data visualization tools to improve stakeholder engagement and understanding ESG risk and opportunity. And about the same 37% also using machine learning and AI for the same purpose. So it is recognized that it actually helps the banks, and how can it help? And there's also a few areas where AI, ML, and cloud analytics can help the banks to become more sustainable. And one of them, of course, is making informed investment decisions. That you need a lot of data analytics to make informed investment decisions. And by assessing ESG impact and also ESG risks on this type of data, banks can make better investment decisions that actually lead to a more sustainable outcome. And that is for their own investment, but also for their customers. As also, as I said earlier, we see a lot of wealth management, but also retail banks that are into investing, providing ESG based investment portfolios, because more and more consumers are aware and they actually choose for these type of products, and AI and ML can of course help a lot in creating those portfolios, but also monitoring the impact, so they can give a certain grade. So there's an ESG scoring model behind portfolios where you can say, I really want to be extreme ESG, or I can do it partly. Those kind of tools are definitely there to help also customers making better decisions. But banks can also use the technology, for their own footprint. Of course, again, it's all about processing large amounts of data and creating insight using AI. There's tools out there for banks to assess and create awareness on their own footprint, and also on how to actually change that. Because we still see that there's quite some banks that are not even measuring the impact, of course, and by not being aware, it will never change. So and AI ML can definitely help on that part. We also have examples. We have built a solution for one of our customers here in the Netherlands, where they help on a global scale farmers to reduce their footprint using also AI and cloud analytics to understand the footprint, but also to reduce the footprint. And we turn that into carbon credits, and we actually help them also even selling those carbon credits. So this is also where you see that technology can help a lot. And there's actually a business even in it. So you can even monetize it with these type of tools. And yeah, of course, it can also help banks to provide more efficient operations, paperless operations, which of course also clearly has an impact. And the last one, touched it before, also with regulation. Banks are definitely faced with demands for increasingly granular reporting and transparency on ESG. And this is definitely also where AI, cloud analytics can help them comply to these regulations.
And just to further bring this to life here, can you further elaborate on how making digital services more accessible remotely actually contributes to sustainability in the banking sector too? Because there's so much going on here, but you can actually see it all taking shape, can't you?
Yeah, no, definitely, and digital. This is of course what we do, and bringing more digital services to customers allows them to do things remotely. So it will save, of course, a lot on branch visits. You also see that banks need less branches for that. So also the footprint of the branches itself goes down, and digital really accelerates that. But the same goes, of course, also for their staff. Digital can also help their staff to work from remote locations, which will save on commuting, which will, of course, in the end also have a positive effect on sustainability. And the great thing about this has a positive impact on sustainability, but even the customer experience with digital also goes up. So this is a win-win situation. You can provide more accessible services that tailor to specific target groups, so it will definitely make customers happy too. And the last one, also important, by with these digital services centralizing more systems and actually bringing it to the cloud, which is also more energy efficient than decentral computing, also has a positive effect, and these are also one of the I think important benefits of digital services to create a better impact in sustainability for banks.
And I'd love to look into the future a little here, because we're already seeing audiences' expectations continue to evolve, and they're also increasingly adopting new emerging technologies from virtual reality, augmented reality, and even extended reality. So what would you say are the possibilities and benefits of using something like an augmented reality headset in banking, particularly in terms of sustainability and customer engagement?
Yeah, this is in the end similar, of course, but the next step compared to digital services, it will definitely enhance using AR, will make it more possible to do remote work. You need less branches. It will have an effect on staff too, of course, and in the end, it will enhance the customer experience. And AR and also VR, that's of course closer to a real branch visit than just regular digital services. But in the end, the effect will be the same. It will accelerate more. And we have, for instance, we also provide services around it. We have built also for one of our customers, a bank in India, a metaverse launch where we really have an AR-driven launch actually that offers customers an immersive interactive experience where they can actually understand and learn more about products, and they can basically create a digital twin of themselves and interact in that launch with banking agents. So it's really great that we see that these type of technology definitely enhances customer experience, will make processes more efficient in the end, then also, of course, have a positive impact on sustainability.
And for anybody listening, especially banking executives that might be struggling to balance immediate financial concerns with long-term sustainability goals, what advice would you offer that person listening?
Yeah, the main advice would also be to look at sustainability, with a new light. What we see is that you shouldn't just do sustainability for the sake of sustainability. One thing is it needs to be, it's a mindset too, right? It is to be out there for a better world, and that is important to when you go into the future to be a brand with a purpose. So also for that, it's really important for the bank actually to understand that and to keep customer loyalty. They will need to invest in that too. But it is a mind shift too. It is important that everybody in the bank understands that this is an important topic. That's number one. But of course, it's a business, and so they have to make money also. So it is important to understand that there is definitely also a business case and monetization possibilities around sustainability. So it can actually really have a positive effect on your top line growth too. As I said, we see many products, ESG investment portfolios, but there's also specialized loans for, let's say, solar panels, isolation, and sometimes even backed by tax benefits based on local regulation. So there's a lot of business opportunities also out there that you can monetize. And I think it's really important to understand that it will have, again, it's a win-win situation if you do it well. And next to that, of course, regulation is also on its way. So you better prepare. But I think that longer term is also really important that I touched earlier. You need to become also that brand with a purpose. Otherwise, you will lose customers on the longer term and also employees.
And finally, how is Hexaware-Mobiquity assisting banks in using digital technologies to drive that both sustainability and performance that we've been talking about today? It'd be great to hear your role in this too.
Okay. Yeah. As I said, we build and we transform a digital bank, and so we have helped many banks also to make sure that they need less branches or become more effective in that sense. But if we focus also specifically on sustainability, we have a few nice examples. For instance, also here for a bank in the Netherlands, we have helped them based using AI and ML to make a estimate of the carbon footprint of a certain individual. So based on transactions, you can actually provide awareness to the customers about the carbon footprint, and you can also give them advice. And this is the awareness step, but also very concrete advice. We have done the same also for a customer where that is actually helping their clients, so a bank helping their business clients to also reduce their footprint and also saving costs. So this is also where they make it clear that to their clients that sustainability has a positive effect also on your P&L. And we have also built a platform and even also with advisors around it, and we digitize that to help entrepreneurs and small and medium enterprises to actually drive a more sustainable business. I've also touched about that system that we built to help farmers in the world reduce their footprint, turn it into actually a more sustainable business, and turn that into carbon credits and help them actually trading those carbon credits to us. So this is also a positive effect on the business scale, of course, also of these farmers. Yeah, and that example that I also just touched about, that metaverse example, but using AR, provide that virtual branch is also, I think, a very interesting example of how we help our customers digitize using the latest technologies and also become more sustainable, but also have lower cost and increase customer experience all at the same time, which is, I think, a really great combination of benefits.
Well, I cannot thank you enough for sharing your time with me today. And I'm going to see if there's something we can do for you in return now, because some of the biggest names in business, VC funding and tech have either been guests or listened to this podcast. So is that a person you'd love to have a private breakfast or lunch with? And we'll see what we can manifest together here, because he or she might just hear this, but who would it be and why?
Yeah, that's a very interesting question, Neil. And I have, I think, an answer that other people might have given too, but for me, Elon Musk is definitely a very interesting person, and I know he also sometimes has a questionable reputation in the things he does. But if I just look at how he changed, the world of payments with PayPal, how he changed the world of car manufacturing and electric car, and also a positive impact on sustainability with Tesla. Bringing people, of course, to the moon, and now with X, also trying to build the super app that might even make banks obsolete. Those are such great examples of changing the world, and I would love to understand, what drives such a person, what is the what's the whole secret behind this behavior. That would definitely be very interesting to understand more.
Well, we'll throw that out into the universe, into the ether, see what we can manifest together. But before I let you go, for anyone listening, just want to find out more information about anything we talked about today, ask your team a question, join your community, whatever it might be, where would you like to point everyone listening?
Well, of course, we are personally always the best to connect to me on LinkedIn. But we also have www.hexaware.com for the parent company, with www.mobiquity.com for the specific information on what we do and how we can help clients actually in that next step in the digital era.
Well, I love talking with you today, learning more about your research report, which I'll also include a link to, and also how you're helping your clients use digital technologies to drive both sustainability and overall performance. I think we often hear them talked about separately, but never together. So it's great to hear that. Just a big thank you for sharing your story today.
Well, thank you, Lee, also for having me. I really loved the interaction.
So huge thanks to Peter for shedding light on a topic that's vital, yet often overlooked in the banking industry. Because our discussion today, I think, revealed the complex dynamics at play around sustainability as banks navigate things like economic uncertainties and often at the cost of sustainable practices. But Peter's insights, backed by extensive research and hands-on experience with leading banks, I think it underscores the importance of integrating sustainability into a core business strategy. And delving into technologies like AI, machine learning and cloud analytics, they're not just buzzwords. They are becoming critical tools that drive sustainable practices while enhancing profitability and customer experience. So as we wrap up this episode today, for me, I think it's clear that sustainability isn't just an optional add-on, but a necessity for future-proofing the entire industry we're talking about here. Ultimately, the intersection of technology and sustainability is where the future of banking lies. For everyone listening, please keep exploring these avenues. Let me know how we can all make a positive impact together, and let me know your thoughts. Maybe call me out on it. Say you disagree with some of the things we've said. Offer different sides of the argument. All opinions are welcome. If you want to come on the podcast, I'm happy for that too. Email me, techblogwriter@outlook.com, Twitter, LinkedIn, Instagram, just @NeilC. Let's keep this conversation going and encourage healthy debates around this. But that's it for today, so thank you for listening as always, and until next time, don't be a stranger.